Hello there. Welcome back to grade 11 accounting. In this video, I want to look at a test that is of March 2023. And this test is from the province of Limpopo. So this question that we have. So going to our question, we are going to look at question 3 on that question paper that is on fixed asset ledger. And we are also going to look at the fixed asset note. So this is what we have. So our question is good at 40 marks and requires you to spend on average 36 minutes on that question. Then our 3.1 is the first part, which reads choose the concepts in column B that best source description in column A. Write only the letter next to the number on the answer sheet. Our question is 7 marks. So we have got column A and column B. Obviously, we need to go through the explanation, try to see the concept or the term that we are having in column B that matches the explanation that we have in column A. So on our first part, we have a fixed amount of depreciation is written off every year on our fixed assets. So we need to find out from uh, the column B, which matches this explanation. So if you go to D, it says depreciation on the cost price. So this becomes the correct response that we have. Go to 3.1.2. A separate record is kept of every asset in the business. So we know that this is a fixed asset register, and we got a fixed asset register E. So we have E as the correct response. Then you go to 3.1.3. In the note for fixed assets, uh, in the note for fixed assets, the original cost price is shown. So we try to see again. So obviously, you see that this explains the historical cost principle that the fixed assets should be displayed at their cost price. So that's a historical cost principle, and it's the perfect fit that we have for this explanation. So for A, the disposed asset will be indicated at this value in the accounting records. So go to F is carrying value. Obviously, it's our carrying value. So we have F and 3.1, 0.5. The value, the asset are lost during the financial year. The value, the asset lost during the financial year. And we try to see, according to the explanation, that we have got depreciation, obviously, the loss of value of that current asset. Obviously, C, we have C as the correct response that we have. And then 3.1.6, when an asset is of no use for the business, uh, we check again. If you go to G, that's an asset disposal. So disposal is when a non-current asset is being sold. So that's when we open a disposal account. So this kind of asset disposal becomes the greatest fit that we have the perfect fit according to 3.1.6. Then 3.1.7, when the accumulated depreciation is deducted from the cost price of an asset before calculating depreciation for the current financial year. So try to see again. This is a method of calculating depreciation, which is the carrying value method, or we can call it the reducing balance method, or we can call it the diminishing balance method. So basically, we try to see, if you go to B, depreciation or the diminished balance. So we have B as the correct response. So these are the responses that we have on the first part of our question, that is 3.1. Then on 3.2, it reads that the following information relates to the purpose source. The financial year ends on 28 February 2023. For the required part 3.2.1, use information A to complete the following accounts in the general ledger of the purpose source for the period 1 March 2022 to 28 February 2023. So you're given part A, vehicles, part B, accumulated depreciation on vehicles, part C, asset disposal. So we are going to open these accounts, but we have them opened in our accounting, in our answer section, whereby we put the general ledger, vehicles, accumulated depreciation, and also we have the last one, which is going to be the asset disposal account. So this is going to be our assets disposal account. We are saying this is the asset disposal. So basically, that's what we have. So we are just going to use those accounts to enter the part A, part B, and part C. So we are also using information A, very important. Take note of the period, which is 1 March 2022 to 28 February 2023. That's our financial year. So we can take note of that. So we go to information A to try to see what we have that we are using to prepare that. So this is going to be your information A that we have here. This is our information A. So it is the following information was obtained at the end of the previous financial year. We are given vehicles, accumulated depreciation on vehicles, and a column for 28 February 2023, which is the current year, and 28 February 2022, which is the previous year. So we have also a note 2, which is saying depreciation on vehicles is calculated 15% per annum on the straight line method. So very important to take note the method of calculating depreciation. Then part 3, on the 10th October 2022, an old vehicle was sold for 310,000 rands cash, and the cost price of the vehicle was 420,000 rands, and the accumulated depreciation on 20th February 2022 on this vehicle amounted to 35,500. So basically, this is the information that we are given. But obviously, we are saying our first account is going to be the vehicles account, and we are having a balance BD as pre-entered. So from there, we can try to pick other information that we have there. So we can just maybe start with the first adjustment that we have so that we can see where to post our. So if you check here, it's saying depreciation on the vehicles is calculated 15% per annum on the straight line method, fixed installment. And then on 10th October 2022, an old vehicle was sold for 310,000 cash. The cost price of the vehicle was 420. So basically, we are saying we can start by putting down the depreciation. That is depreciation for the year. We are supposed to calculate depreciation for the year, and also we are also supposed to take note of the carrying value. Carrying value for the asset disposed. So we can take note of this, but basically we are saying what we are concerned about at this point is the double entry and double entry. Double entry of the assets disposed. Double entry of the asset disposed at cost price. At cost price. So basically, we are saying we are told that the one that was disposed is the one that was sold. Remember, we said that disposal is the same as being sold. So it was sold for 310,000 cash, but the cost price of the vehicle was 420. So this is the cost price that one. Remember, this 420 is inside the value that we have at the beginning, which is 890,000. This cost price is inside the cost price in the beginning, which is 890,000. So we need to remove this non-current asset, which is vehicles, which was sold in our books because it's no longer in our business, so it has to be removed. So the double entry that is there that we need to take note of is that we remove it by making a double entry of the asset disposed at cost price. So how do we do the double entry? We are supposed to we debit disposal account at cost price disposal, and then we credit the non-current the asset account. In this case, we put vehicles. So this is the double entry at cost price. So we are seeing that the cost price that we have is 420,000. So we are making this double entry using 420,000, which is at cost price. But then if you look at the requirements of the question, we have both of the accounts we are, which is the vehicles account. So we are going to the debit side of the disposal and we enter 420,000. So we go there to dispose our account. Then this is our disposal. So we are saying we go to the debit side. And remember, this is 2022. 2022. And this is happening October 30. Remember, that's when the October 30, if we refer back, we see that our non-current asset was disposed uh, on October 30. So October 30 is the date. That's why we are putting that October 30 is our date. So we are saying October 30. So all the details we are saying the double entries that we are debiting, disposal, and crediting are the vehicles account, which is the asset account. So here we are going to give the description of the vehicles. So we are saying vehicles. And the amount that we are saying we are using the cost price, which is 420,000. So we say 420,000. So obviously, in terms of folio, we put the subsidiary book. Obviously, this is the general journal GJ. So this is the abbreviation that we have. Then we also go to the asset account, whereby we have our asset account here, which is the vehicles account. And then we are going to the credit side, and we are saying this is transferring 2022 October 30. So we just write here 2022 October 30, and we write disposal. And on disposal, we are saying we take this again from the general journal, and the amount is 400. New that the amount is 420. So we are saying 420. So this is what we have. So we have finished double entry at cost as we are removing the asset in our books. So we can just try to see in terms of the next double entry that we need to also to take notes as we complete the assets that needs to be the accounts of the assets that we need to complete. So going here now, we see that the next aspect that we have is on the issue of depreciation. We've got depreciation of the non-current asset disposed. So if you come here, you see that we are told that it was sold for 310,000. The cost price of the vehicle was 420,000, and the accumulated depreciation on 20th February 2022 on this vehicle amounted to 35,500. But this is depreciation on 20th February 2022, but it was then sold on 3rd October 2022. So it means we need to find the depreciation of the current year so that we can be able to calculate depreciation to get the depreciation of that non-current asset that was disposed, that is vehicles, from the day it was bought up to the day it was disposed. That is up to 3rd October 2022. So we go back to the method of calculating depreciation is 50%. Straight line method is on the straight line method. So basically, the formula for straight line method is we say percentage times cost. So basically, the percentage we're given it here is 15%, which is 15 over 100. And then we multiply by the cost. The cost we're given the cost as 420,000. So we multiply by 420,000. Then, but this vehicle was not there for the whole year. Remember, this 15% is per annum per year, but this vehicle was disposed on 3rd October 2022. So we need to count how many months do we have there that it was in business before it was disposed for the current financial year. Our previous financial year is ending end of February, remember end of February. So it states March, April, May, June, July, August, September, and the whole of October because it's 8 October. Then we have 1, 2, 3, 4, 5, 6, 7, 8. So it was there for 8 months. So what it means is after you have calculated 15 over 100 times 420,000, you are supposed to multiply by 8/4 to get the proportion of the 8 months that are this non-current asset state. So that's financial period. So to calculate it like that, we can just maybe try to calculate to see what do we get. So if you calculate like this, you see that the figure that you are going to get is going to be of 42,000. So this is the depreciation for the current year for that non-current asset that was disposed. But we know that we are given depreciation up to 20th February 2022, that is in the beginning of the current financial year. So it's 35,500. So to get the total depreciation for that non-current asset from the day it was bought to the day it was disposed, you're now going to say 35,500 plus 42,000. 35,500 plus 42,000. You try to calculate it like that. So you see that the total that you are supposed to get there. Let's try to add the two. So you are going to get 77,500. So if you calculate it correctly, you get 77,500. So this is now the accumulated depreciation of the vehicle disposed. So of this non-current asset that was disposed is now you are supposed to debit you are supposed to share on vehicles, and then you credit disposal. And we have both of the accounts. We have them in our question. So we're going to the debit side of accumulated depreciation on vehicles account, and then we put our 7,500. Then we go again to the credit side of disposal. If you go put our 7,500. So we go there. We see that this is our accumulated depreciation on the second part here. So I remember also before we enter that transaction, we are supposed to enter also the opening balance of accumulated depreciation account, which we see at the beginning of the question. Remember, we've got the accumulated depreciation on vehicles. The opening balance that we have is on 20th February 2022, and it's 350,000. So we are coming here. We are saying on the credit side, that's why we put our balance BD. So we are saying balance BD, and we're given the amount is 350,000. So exactly this is the balance that we have 350,000. Then all the dates remember we are saying the beginning of the period, so it's 2022, and it's on 2022. You can just maybe try to. We are saying it's March 1. So that's in the beginning of the period. Then now we can now put the double entry of the asset disposed. We are saying depreciation of the asset disposed is 77,500 that we calculated there. So we just come here, we come to the debit side. That's where we are putting that double entry of 77,500. And it's 2022 again on the date, October 30. And on details, we are saying asset disposal. Asset disposal. And then obviously it's the general journal in terms of the subsidiary book. And the amount, so we got it as 77,500. And remember, I said we debit accumulated depreciation and we create disposal account. So you go to the disposal account, and we are supposed to, on the disposal account, we are supposed to go to the credit side. So this is accumulated our depreciation, and we try to see in terms of our disposal account. So on our disposal, we are going to the credit side, and we are going to see obviously date is again 22 October 30. 2022 October 30. And all the details, we are saying accumulated depreciation on vehicles. So it's accumulated depreciation on vehicles. So we can now just maybe try to accumulate depreciation on vehicles. And then obviously the folio we are saying it's general journal, so we say general journal. And then the amount we have 77,500. So we've completed in terms of accumulated depreciation of the disposed non-current asset. And then obviously we have the cash now. We remember it was sold for cash 310,000. So we also have to put down the double entry, double entry, double entry on proceeds of disposal. That is when we are disposing the amount that we've disposed, what the double entry that we are supposed to effect. Here we sold for 310,000 cash. So this 310,000 cash, and what's the double entry involved? Remember, we are receiving cash, obviously we debit the bank, and then we credit disposal. So according to the question, we do not have the bank account that is required in the question, so we can ignore this part, but we are supposed to credit disposal, which then we are going to say bank 310,000. So here we say bank. Obviously, this one again, general journal. This one now, we are saying we are receiving money, so obviously we are going to put it in the cash receipts journal, which is the CRJ. Then the amount that we have is 310,000, so we have 310,000 here. So this we have completed that one in terms of the amount of disposal. So we still have another the last double entry that we have to make, that is now on the depreciation for the year. Depreciation for the year, so we can just maybe so we are saying for depreciation for the year, the double entry that is involved is we debit profit and loss account, profit and loss, and then we credit the accumulated for depreciation account. Accumulated for depreciation account. So basically that's the double entry. And profit and loss, we are not having the account in the question, so we ignore that one. But accumulated depreciation we have it in our answer section. So that's the one that is being affected by this double entry. Yeah, remember we've got accumulated depreciation here, so it means we are supposed to credit it here. So the task that we have now is to find the figure for depreciation for the year. But already we know the depreciation that we calculated. We already calculated depreciation for the disposed non-current asset for the current year. But basically, so what it means is we are having three different calculations that we are going to make there. We are going to make the depreciation of old vehicles that were there for the whole year. And then we have got depreciation for the disposed vehicle. Disposed vehicle is this one that we have here. We already calculated this one and we got 42,000. If you still remember, we got 42,000. And then we've got a new vehicle that was purchased, this one, on 1 February 2023. And then we calculate depreciation for the new vehicle. So after calculating, we add them, and then we get the total depreciation for the year. So let's start with the old vehicles. So for the old vehicles, we are saying at the beginning of the year, we had cost of 890,000, which is here. This is at the beginning of the year. And inside 890,000, there is the cost of the disposed vehicle, which is 420,000. The cost price of the vehicle was 420,000 here. So we have to remove it from 890. That is, we are left with only vehicles that were there for the way. So basically, we are saying 890,000 subtract 420,000. So we can just try to make that calculation. So let's just try to calculate it as such to see what we get. So we are going to get 470, get 470,000. So this is the cost of vehicles that were there for the voyage. So in other words, you are just simply going to say, well, this straight line was saying percentage times cost. So you're saying 50%, which is as a decimal, is 0.15, and then you multiply by 470. So you calculate it like that. You see that the figure that you are going to get is 70,000. You are going to get your 70,500. So this is depreciation for the old vehicles that were there for the voyage. So here we are saying 70,500. And then for the new vehicle, we try to see how we can go about that calculation. Right. For the new vehicle, we are here. We can just go back to the information given. On 1 February 2023, Limpopo stores purchased the new vehicle on credit, calculate the cost. So we are not given the we are not given the we are not given the value of the or the cost price that we have there for the new vehicle. So you need to first to calculate that cost price. So very simple. It is to calculate it. Remember, if you say the cost price at the beginning is 890,000, and then we add the new vehicle that you want to calculate, then we subtract the one that was disposed, which is 420,000. You will get the closing cost price balance of vehicles, which is 640,000. And from there, you can now be able to find the value for the new vehicle by making it example the formula, whereby you are now going to say new vehicle is equal to 640,000 that we have the other side. So we are saying 640,000, then we take 890,000, it's a positive 890,000, the other side it becomes a negative, say minus 890,000. Then we take 420,000, this is a negative 420,000, the other side it becomes positive, plus 420,000. So from there, we can now be able to find the cost of the new vehicle. So we can try to calculate it from that point now. So when you calculate, like, you are going to get your 170,000. So from your 170,000, you can now be able to calculate the depreciation for the new vehicle. So this is the cost of the new vehicle, 170,000. Then we use a straight line using 15%. Remember, we are calculating using cost price method. So we're going to say 50%, which is 0.15 as a decimal, times 170,000. And then we multiply by the proportion of months that the vehicle said. The new vehicle was bought on 1 February 2023. And the same month is the end of the 20th February 2023, the year is ending. So it only said 1 month. So we are saying times 1 over 12. And we can just try to see what we get there. So we say here, this is our 1 over 12. So we calculate it like that. You're going to get your answer is 2,000, 2,125. So this is depreciation for the uh for the for the new vehicle. So to get total depreciation now, we are now adding all the depreciation that we have. Remember we have 70,500 as the depreciation for the old vehicles, but said for the voyage, plus the disposed vehicle is 42,000 plus 2,125 for the new vehicle. So basically, we can just try to bring it down by saying 70,500 plus 42,000 plus 2,125. Then we calculate it like that, see that the answer that we are supposed to get is going to be 114,625. So this is now the depreciation for the double entry for this depreciation for the we put it down. We said we are supposed to debit profit and loss and credit accumulated for depreciation account. So profit and loss we don't have it, I know a question, but we have accumulated for depreciation. So we're going to the credit side of the accumulated for depreciation account, and then we put 114,625. So we come here, see that accumulated for depreciation is here. So we're coming to the credit side, and we are saying depreciation, but this depreciation is going to the profit and loss, and then we are general journal. Then the amount that we have is 114,625. So this is what is here for the credit side. So having done that, now we can now try to see in terms of our, remember we also have our this account that we have that is for vehicles. So we have a new vehicle which was bought, which we need to also effect the double entry. We've got the vehicle here, which was the last vehicle on item 4. This one, it was purchased on 1 February 2023, and then 1,000 here. So basically, the double entry that is debit asset account, which is vehicles, and then we credit, since we are buying using, so credit. So obviously, it's going to be the creditors control because it's on credit. And we see that creditors control, we don't have it in question, but we have got vehicles. So we go to the debit side of the vehicles account and put 170,000 is on the new vehicle that has been bought. So we come here, we are on the debit side, we are saying, remember this is February 1, 2023. So we are saying 2023, February 1. And it's creditors control. Creditors control and on the folio, we are saying it's creditors journal. We put the creditors journal. And then the amount is 170,000. Right, so this is what we have. So from there, we have entered all the elements which need to be entered in our vehicles account so we can balance. So from there, we can now see, compare the total of debit and credit. And by mere looking, we can see that the debit side is greater. 820,000 plus 170,000, you get 1,060,000, which is going to be the greater total. It comes both in between the double lines. Then you now say 1,060,000 minus 420,000, then you get a balancing figure of 640,000. So we say 640,000. And this is going to be your balance CD. And this again becomes your balance BD for the on the other side below at the double lines. So we say a balance BD. We say 2023 March 1. So for balance BD, we are supposed to put the first day of the next period. Remember, our financial year is ending end of February. So 1 March will be the first day of the next period. So we are saying March 1 is our balance building. So basically that's what we have. Then for balance CD, this date of October 30 is also applying on our balance CD. So we have balanced that one. We can go to the next one, which is now the accumulated depreciation for the vehicles. So on this one, we also try to see if you add there, we see that at the credit side is got a greater total. In the greater total, if you add 350,000 plus 140,625, you are able to get your 464,000, 464,625, which is going to come both sides. 464,625. So this is what we have. And then obviously we are going to have our balance CD by saying 464,725 minus 77,500. And then we get your balance CD here is 387,125. And this is what we have. So 387,125. So from there, we have to make a description in terms of our balance CD. And then we are saying the same text we are having there is applying to the balance CD, but also if balance BT on the opposite side below the double lines. And we are saying our balance BT comes here with the same amount, 387 and 125. And then on the day, we are saying the first day of the next period, which we are saying 2023, March 1. So this is what we have on the position. Then we have the last part, which is going to be our disposal. So on our disposal, we are going to see, again, we do the same thing. We have to see which total is greater. But if you look at it there, you're going to see that the debit side is a greater total of 420,000. So we're going to see 420,000 come in between the double lines. But you also have to take note that our disposal account does not have a balance CD and BD. The balancing figure that we get, we are supposed to transfer it to the profit and loss. So we are supposed to just simply post to the profit and loss. And the profit and loss, we find it in the general journal. We are saying general journal. So we said 420,000 minus 310,000 minus 77,500. We are going to get 32,500. So here we put 32,500. So the double entry that is involved with this profit and loss, we can take note. Double entry involved here is that we have credited the disposal, and the debit is profit and loss. That's the double entry that has been involved there. And when we have such, we call it, remember, expenses are go to the debit side of the profit and loss. Profit and loss is a very simple account. We can just try to see. We are saying in our profit and loss, in our profit and loss account, we see expenses on the debit side. And we see income on the credit side. So we are debiting profit and loss with this figure. So it's going to the debit, it's an expense. So if it's an expense, it's going to be loss on disposal. So it also means the same, the opposite, when we are now having profit on disposal. Double entry involved. Double entry involved on profit on disposal. We are saying we debit disposal and credit profit and loss. So that's the double entry that we have. So by credit profit and loss, it's an income, so it will be a profit on disposal. So basically, that's what we what we have in terms of double entry of disposal. So we can try to see in terms of the next question that we have. So the next part of our question is 3.2.2. which is saying use the information B regarding equipment to complete the fixed asset note for equipment. Uh, so you need the fixed asset note. So you go to 3.2.2, you go to information B. That's where we are going to have the information. So we can try to go to our information B. But we see that this is our information B. So having our information B, we can just start from. The reason you are provided with information for equipment relating to the purpose source, complete the fixed asset note by considering the following information. So first point, equipment was sold at current value on the last day of the, it was 85,000. No equipment was purchased during the year. Calculate the missing figures A to D. So we have the information given in the answer section. So if we come to the answer section, you see that this is our answer section, and we've got some pre-entered figures. So the first task is to calculate A. So we're going to put our answer here. So basically, A is carrying value. And the formula for carrying value, we know that we say a cost minus accumulated depreciation. So we have the calculation part. We are supposed to show the calculation here, whereby we are saying, if you check here, we are saying 382,800 minus 146,800 to get our A. So we just summarize that in this row by saying 382 382,800 minus 146,800, and then we get 236,000. So this is what we have. Then we go to this to calculate B now. We go to B, and B we are told that is disposal at carrying value. Disposal at carrying value. So we go back to the information that we have in the question, whereby saying total depreciation on the sold equipment was 85,000. So we have 85,000. That's the depreciation. So if you come here, formula to calculate carrying value is equals to cost minus accumulated depreciation. So the accumulated depreciation we're given it is 85,000 here. So already we have accumulated depreciation 85,000. So we say 85,000 accumulated depreciation. But cost we are not given. If we go back to the information given, we see that there is no cost there. But we can find it from the information that we're given here by saying we don't have any addition. So we say the cost that we have at the beginning, 382,000. We don't have, we have zero additions, but if you subtract the cost of the disposed cost price, you get the cost at the end, which is this one, 172,800. 172,800. And from there, we can now we can just make disposal at cost price. Some of the formula whereby it becomes disposal at cost price is close to 382,800 minus 172,800. So calculate it like that. You're going to get 210,000. So this becomes the cost of the disposed non-current asset. So 210,000. Now we are saying on our calculation, we are still saying it is equal to 210,000 is the cost minus accumulated depreciation, and then we're going to get your answer is 125,000. So we have 125,000. That is our 1B. We're saying 125,000. So remember our A We calculated it and we got 236,000. So we are putting 236,000 there. So this is our to get. So we now have C, which is depreciation for the depreciation for the year. So already we have let's just try to see. So we can also come up with a formula that we can also use to so that we can find our depreciation. That is our C. Remember, we've got accumulated depreciation that we have at the beginning, 146,800. And then we have a depreciation for the disposed. So we can easily find depreciation for the year, which is going to be our C. So basically we say can maybe try to put it in the form of a T account. It becomes easier. So if we say accumulated depreciation that we have at the beginning, plus depreciation that we are looking for, you get plus depreciation that we are looking for minus accumulated depreciation for the disposed asset. You get accumulated depreciation at the end. So basically we are saying, putting it down, we say opening accumulated depreciation plus depreciation for the year on disposal. You get closing accumulated depreciation. This is exactly what we are trying to say. So basically, we go back to our information. We say accumulated depreciation at the beginning plus depreciation for the year minus accumulated depreciation for the disposed assets. You get your accumulated depreciation at the end. So basically, we can put that down by saying 146,800. 146,800 plus depreciation for the year is the one that we are looking for, minus accumulated depreciation for the disposed non-current asset is 85,000. This one, and you subtract it, 85,000. You get accumulated depreciation at the end, which is 83,000. 83,000. So from there, you can now make this one sample the formula so that you can get this value by saying we've got 83,000. You take 146,800, the other side it becomes negative. You take 85, negative 85,000, the other side it becomes positive 85,000. So say 83,000 minus 146,800 plus 85,000. We are supposed to get you 21,200. So we get you 21,200. So this is our depreciation for the year. So we come here, we just summarize that. We put our C calculation of C, whereby you're saying 83,000. You subtract 146,800. You get 85,000. And then you get your answer is then the answer that you're supposed to get is 21,200, which is the same figure that you're supposed to put here. This is 21,200. That's what we'll say. And you're left to obtain this carrying value at the end. Very simple. 172,800 minus 83,000. Then you get your 89,800. So here you say 89,800. So this is what we have on this part. That is our fixed asset plot. And then we go to the last section, and that is now on 3.2.3, step 3 internal control measures to ensure better control over the business fixed assets. So that is our next item that we want to look at. So we can just try to see explanations that we use within that. Or these are the responses that we have in terms of the internal control measures to ensure better control over the business fixed assets. First one is saying non-current assets must physically must be physically safeguarded against theft. That's the first one. Second one, proper authorization must be obtained for purchasing a new asset, and we've got all assets must be recorded and maintained in the asset register, and then all the asset registers must be regularly monitored by doing a physical stock taking. Then we've got lost, stolen or damaged stock must be reported immediately. Execution policy must be established and implemented. And lastly, any change in respect of non-current assets must immediately be recorded in the relevant subsidiary journals. So, but if you go back to a question, it needs only 3. So you can just pick 3 from the ones that we have. The last part of our question is on 3.2.4. Give 2 possible reasons for selling a computer or equipment. So we are obviously we have got challenges with that non-current asset. First, the asset is old. That's how we can. That's how we can have a reason to let that non-current asset go. First one, the asset is old. Then second one, the asset is outdated or obsolete. Then the last one, there is no longer any use for it. So our question requires 2 points. So we just pick 2 points. Then the total of this question 3 of this question paper is 40 marks. So this is what we have. So thank you for listening. Hopefully the video was helpful. Please, let's not forget to subscribe and share. Let's share the link to our colleagues who are doing the 11 accounting. More typical examination questions are going to be uploaded on this channel. So let's get notified. Let's stay tuned. Let's meet again in the next video. As for this video, I'm out.